Hi everyone, hope you're all doing well. Today I just thought I'd squeeze a mini video in, talk about hims and hers, because you guys have been requesting this a lot in the comment section. So we'll go through this very quickly for Sunday and keep it short and sweet. So hims and hers, obviously it's stock that I've owned this stock for around about a year and a half now, and the stock has performed historically very well for me since I've owned it. Before that, the stock actually came through a SPAC, jumped all the way up to $23 and then went crashing down as every single SPAC seemed to get tainted or painted with the same brush. And since then I was looking at this stock, and when it kind of got to the $7 range, I went, you know what, actually I really like it, this sort of range, and kept buying it. Actually went all the way down to $3, and that's actually why I do like averaging up. If I buy a stock and it's a certain price, then it goes down another 30-40%, I just go, if I love that company, give me more shares, especially if it's financially performing. And I felt like hims and hers was doing that at the time. And then from that point of view, the share price rallied up. And for me, I was selling out a 100% return at some points on hims and hers. And that's why, even though I'm a major bull of hims and hers, you might remember a few months ago I was saying I am going to trim the position by, I think overall I took either 5 or 10% out of the position, just because even though I love it, the stock had rallied up so much. And I will sell a stock out or trim a position if I feel like the stock has gone ballistic. And I always refer to elastic band. A stock, if a stock goes crazy undervalued on an elastic band side, it'll slingshot back into where it should be. And it's same on the upside. Even if a stock is doing financially well, but it slingshots too much in the wrong direction or too much in an upwards direction, it'll snap back to reality at some point. And I felt like hims did that at $3, shot back up to a fair valuation, but then slingshot to a very high value, not a high valuation, but ran up a bit too much. And I took the profit off there just for a bit of protection. And since then, obviously the stock has dropped, so that did look a pretty good move, trimming that position when we were taking 100% profit. Now that it's back it down at $8, a few people saying, what's going on? Why is the stock dropping this much? And also, is it a buying opportunity or is it a chance to buy again? Now I will say, like I just said there, you've got to take into context that the stock has rallied up. Even from those $3 lows, some people are sitting on 139% gain. Even for me, I'm still up a good amount in the position, but it is having a bit of a pullback. Now, this isn't going to be a video like breaking down hims and hers as a full company, because I've done that multiple times on the channel. This is actually going to be a video just right now, what's going on with hims and hers. So for you guys that may have wanted a bit of background on it, sorry, this video is not for you. I've got a few more videos out there that breaks down the company itself, but this is a video where what is currently going on with the situation, or what's going on with hims and hers at the moment. So first thing, like I said, I think it's fair to point out that it went on a bit of a rally, especially from January time. Within 4 months, the stock rallied up 100%. That's quite a big jump. So it is natural to have a bit of a pullback at the time. That's absolutely fine with the stock. So I think that's one thing to be kind of pointing out. The next thing is, when you look at the initial drop when it put in 52-week highs, if you actually look at that, pinpoint that drop actually came off earnings. You look here, 8th of May is when the last earnings came out, and if you look at the peak of the share price, it was basically the 8th of May, as you can see there on the Google chart. So you're thinking, we've pinpointed this drop to the earnings, so let's have a look at the earnings. So I'm having a look here. EPS is in line, that's okay. Revenue of 190 million, beat by 11 million, so there's no issue there with the revenue guidance side of it. Raises full year outlook 2023 revenue guidance to a range of 110 to 130 million versus the 755 million consensus. Wow. So there's no issue with the revenue side. There's no issue with the guidance on the revenue side. Is it the profitability? And adjusted EBIT guidance to a range of 25 to 30 million. This was previously projected to be 20 to 25 million. So that's obviously been increased as well. So we've had basically a triple beat on the numbers. So even though the drop pinpoints to this, there's not really any standout reason why, and it's not like they've given any kind of weak guidance here, especially when you look at the second quarter numbers, 200 million, 205 million versus 183 million consensus. So there's not really any clear reason why the stock should drop off this point of view, and that what initially points me to it's just having a bit of a cooling off phase. Now, the only little thing that I can pinpoint in this earnings is that Andrew Dunham was not on the conference call. He was currently on maternity leave. So maybe because he wasn't on the conference call, and maybe he can just sweet talk investors and maybe give a bit more information and talk about things in a little bit more detail. Maybe with him not being there, maybe that was the reason why investors were a little bit edgy or a little bit nervous about certain things. So maybe that when the Q2 comes back and Andrew Dunham will be there doing the conference call, maybe that will kind of reflect better. That is the only thing I am really, you can see here, I'm really pulling at straws here. But that is maybe the reason why that he wasn't there present. Because everything else, you look at the business, the recent earnings were good. The valuation is still pretty good. It's hard to use a lot of adjusted EBITDA because it's just starting to focus on profitability now. But on a price to sales ratio, it's down at 2. Total enterprise value to revenues, it's down at 1.8. You know, you look at the levels of gross profit the company's throwing off. In the last quarter, you can see they did 190 million in revenue. The gross profit was 153 million in gross profit with an 80% gross margin. That's absolutely, ridiculous. And that's just going to lead to more and more profitability, because the thing is that Hims and Hers, when it acquires the customers, it only takes them 1 year to get that revenue back or make the money back from acquiring that customer. And then you think about all the products they keep adding into the Hims and Hers platform, you can see why the gross margin's so high, and it should start putting in really good amounts of profitability, and we're starting to see the adjusted EBITDA profitability start ramping up as well. Now, what they actually did, and not many companies actually do this, because it makes a bit of a rod for their own back if they start giving in longer term guidance, but they actually did give some longer term guidance. They did an investor presentation not too long ago, and in the guidance they actually gave long term adjusted EBITDA margins of 20 to 30%. So that gives you a good idea what potentially they could be doing on adjusted EBITDA. Gross margins in the mid 70s, so still very good gross margins. Revenue of at least 1.2 billion, which I think they'll actually outperform, and adjusted EBITDA of at least 100 million as well. So that's a 2025. So we're only 2.5 years off that. So, you start looking at adjusted EBITDA of at least 100 million, considering they're going to do 20 to 30% on 1.2 billion as well. That's quite conservative. You're starting to get down to the likes of 17 times adjusted EBITDA for a company that's growing absolutely rapid. And actually, when you look at the recent earnings and what the company's growing at, the current quarter is 79% year-over-year growth, which is absolutely fantastic. Still growing at them sort of levels. Next quarter, 62%, and for the year, 57%. I think that'll be up 67 to 80% revenue growth this year. I think that will get increased more and more, like we saw in Q1. But the crazy thing is that they're expecting next year, unless they're expecting the growth to slow down to 24%. And that's a quite a big slowdown for Hims and Hers, for a company that's historically been putting in very high amounts of growth, and I think they'll actually come in a lot higher than that. And that's when you look at the Hims and Hers guidance. Their guidance does suggest in the longer term a slowdown to that slower 23%. Well, a lot of companies would beg for 23% revenue growth, but it suggests a slowdown. So I think we could even see higher than that revenue by 2025, and I actually think we could see higher adjusted EBITDA than that as well. And when you look at the growth from the company, they've been just absolutely rapidly growing. And like I said, they are expecting the company to slow down in 2024, but hit $1 billion in revenue for the first time. I think the company will even grow more rapid than this when you look at how they're acquiring customers and they're adding more and more things in. So that won't be too surprised there. So the more when you look out from a longer term point of view of Hims and Hers, you look at the company that's absolutely smashing it and executing to perfection. You're looking at the valuation, which granted only revenue and price to sales ratio at the moment that we can use, but the more they're ramping up the profitability now, and if you look at the gross profit, if you look at gross profit to enterprise value or market cap, very, very cheap when you look at them gross margins. You look at the company and the long-term numbers they're projecting, and I think even these are majorly sandbagged. But even then, you start looking at the metrics they could potentially be, doing in only 2.5 years' time, and they look, very cheap. And like I said, I think they're sandbagged. And then you talk about a company that is sitting in a pretty healthy position. It's still amazingly healthy balance sheet. They've still got 184 million cash to use. It looks pretty attractive at the moment. So I think at the moment that while the share price has a correction that just is because I think the share price run up, do I get to a point where I potentially could pull the trigger on it? And the answer to that would be yes. I let you in a bit of a secret. Normally only the Patreon members know about this until I do the stocks I'm buying on the YouTube. But I have bought Hims and Hers a couple of weeks ago, and I will actually probably buy again if the stock does drop another probably another 5%. If it gets into the $7 range, you probably see me buy again. So I personally am using this dip at the moment to actually accumulate more shares, because when I look at the company, I look at the execution, I look at what potentially we could be talking about the company doing in the future. 1.2 billion revenue, I think this is still incredibly low. I don't see Hims and Hers dropping down to 20% revenue growth anytime soon. I think they'll still be growing 30, 40+%. I think adjusted EBITDA wise, we see with them gross margins, we see them long-term gross margins coming even quicker. You start talking 30% adjusted EBITDA margins on 1.2, I think we'll be talking about in 2025, probably 1.4, 1.5 billion. You start talking a 20% margin on that, you're talking nearly, 300 million. And then you look at the valuation here at 1.75, billion market cap. And you're talking 5-6 times for a company growing at these sort of levels with an amazing balance sheet, major TAM. The more services they'll be adding into the platform, it's just very, very attractive to me. And I still think it is one of the most attractive growth stocks out there right now. So yeah, I am buying, but I am buying slowly. I am hoping to see 7s and even potentially 6. If I see a 6, then yeah, I'll be buying massively. So that's where I am with Hims and Hers at the moment. I hope you enjoyed the video. Smash the like button. You guys on the Patreon, I'll have some exclusive content for you guys very soon. So don't you worry, and I'll catch you in a bit.